Eric Muthith, Mother.com, with world market analysis for the weekend of November 26th and November 27th, 2016. Let's take a look at how markets closed on Friday, and we can see pretty much a nice close. The end of Friday's session, a good gain. Take a look at European market at the close of Friday's session, and we also see slightly unchanged to the upside. So let's call it a nice close to the end of the week. Take a look at the Americas, and we are seeing that Brazil is slightly up, Canadian market slightly up, also US market closed slightly up. Let's call it a good day worldwide into the close of Friday. Let's take a look at those world market charts. We begin with Australia, and we can see on the monthly continues to show this 50 RSI bounce, which is good and showing a sign of stability. The last time we hit that 50 RSI level on the monthly was here for a good monthly gain. And as long as it is bouncing on RSI 50 on the monthly, we can assume that it continues to be stable. Day to day, it's coming back to test the daily RSI break that brought it off the highs. So there, and pretty much we are coming back to test this, and looks like if it cannot move above that red line, the next meaningful direction might be for a swing trade lower. So resistance and confirmation of resistance here means the next swing trade is lower. Otherwise, if market bulls want to see the instrument trading higher, it needs clear resistance here. That's the only way we can see short term that there's going to be an increase in the recent move of the low. So coming back to resistance day to day, looks like as long as that resistance is confirmed, we can look for a pullback around here, and then we can gauge whether we can get eventual support on this upward sloping 50-day and upward sloping 200-day moving average. So net day to day, we are coming back to resistance, but generally speaking, the chart looks okay to sideways. Take a look at the Chinese market. We continue seeing good action here on the weekly, with the 13-week moving average continuing to advance above the 34-week moving average. Ever since we cleared the previous weekly closing high for 2015, this market's been looking okay. And as long as we see this nice gradual recovery of the lows, this market net one can assume continues to be stable to very positive. We can say the same thing here. We see a good crossover as far as the Japanese market is concerned between the 13-week moving average moving above the 34-week moving average, and since the crossover we continue to see good action to the upside, and especially since this movement here of the previous 2016 weekly closing high. So market broke out above that level, and that was at 17,572.49. So as long as the market is holding above that, you can assume that there's a chance for a stable to bullish market. One thing we also pointed out is we could be that after this nice recovery of the lows here, we could be coming to a level where we could see resistance based on this break of the highs. So ever since the break here, market came off the highs, let's call it about August of 2015. So we draw a line from there, and you can see we are coming back to test this red line. So if the bulls want to move the market higher, they need to clear that level and trade above that. Otherwise, we might see resistance. So we need to trade above that for bulls. Otherwise, confirmation of resistance on the red line might suggest that the next swing trade is going to have to be lower. So resistance for the next swing trade being lower, or you clear that red line and you continue advancing. But net looks good, especially with the 13-week moving average crossing above the 34-week moving average. Even with pullbacks, we can still assume that the market continues to be healthy, if not outright strong. Take a look at the Nifty, and what we can see here is the exact opposite. We got possibility that the 13-week moving average is going to undercut the 34-week moving average here. That would be bearish. The last time we did something like that was during this period here. So that was a bearish crossover, again between the 13-week and the 34-week moving average as far as the Nifty is concerned. ultimately we would go to lower prices. So the problem here is this could also be developing on the weekly, which would be a net negative. But I think we can take a look at the hour on the weekly chart RSI, and we can see that this is where the RSI moved off the lows. RSI moved higher here for a successful move and recovery. So we draw a line from there, and as this line could actually be what the market is coming back to find support. So at the end of the week, the market did find support here. As long as this green line support is holding, I would speculate that the next meaningful direction for the Nifty looks to be higher, unless the market fails to hold that green line and we break below it. So support would suggest the next swing trade is to the upside. Failure to hold this green line here would suggest the next swing trade is going to be another drop to the downside week to week. On the daily for the Nifty, we can see topside resistance coming in play right now. So if we see resistance here day to day, that suggests that the market continues to struggle. Otherwise, bulls would like the market to clear that level and start a stronger recovery. So either resistance on this blue line and the market trends lower, or you move above that resistance line and you see the market start moving back above that 200-day moving average. Now another way you can look at this is just consider the 200-day moving average. As long as the market is below the 200-day moving average, that continues to be net bearish. But if the market can recapture the level back above that 200-day moving average, then we can assume the market is beginning to recover. There's also another view, which is this previous daily closing high. So let's just draw it that way. Once the market broke out above that level, and that's at 7997.90. So this was the previous intraday high short term. Market moved above that range there and then came back. It acted as support here, was support during this down day, and we can see we spent 1 or 2 days below that, but we closed above that for the week. So this line tends to be is recently showing support. As long as the market is above this line here, we can assume that the market is finding the necessary support. Keep in mind, day to day on the RSI, one can watch this line connecting RSI topside. Again, resistance on this blue line means that the market is struggling. Otherwise, if the market can clear that blue line resistance, then we can see the market start trending higher. That daily resistance line is confirmed by the hourly topside resistance. So you can see that short term, the market needs to clear daily resistance and also hourly topside resistance. Otherwise, failure to move above the daily resistance and failure to move above the hourly resistance suggests that the market is still caught in this downward movement. So resistance here suggests that the market still has downside pressure. Otherwise, if the market can clear that daily resistance and this hourly resistance, then we can start seeing a stronger recovery. Now, if you take a look at the Bank Nifty, I think what the Bank Nifty is doing is coming back to test RSI 50 on its weekly chart, just like it did here. Moved back above the 50 level for this re-entry. We touched the 50 level here for the lows there, and now we are coming back to test this 50 level. If you take a look at the daily and figure out what the market did to come out of the lows, there was this RSI movement here that brought the market off the lows, and of course the market went on a strong recovery run. So we draw a line from this RSI action to something like that. So it looks to me like as long as the market is showing this double bottom support here, as long as the market is above this green line on the daily RSI, it suggests that the next meaningful direction is to the upside. And we can see evidence of this on the Bank Nifty hourly chart. As you can see, we made a lower low here, but we had an improvement in the technicals. So that positive divergence, in my opinion, sets the stage for a continued recovery as far as Bank Nifty is concerned. Now go back to that daily chart, and again, so let's draw that line again. So if the market cannot hold above this green line, that's a problem. So let's say if the market stalls around here and cannot move above this green line and rolls over, that's going to be short-term an additional sell signal. But for now, I think that's a reliable line. As long as the market is bouncing on that line there, then that is evidence that this market, or let's call it the bank Nifty, wants to recover. European markets remain in a range for the most part. For example, take a look at the French market, stuck in this range. So stuck in this nice wedge here on the daily. So that's one way of looking at it. RSIs are also stuck in a wedge. So the market continues to be sideways. Take a look at the German market. It is also stuck in this box. Been trading in this box since about August. And we haven't moved either. We haven't decided whether we want to go above the box for a continued move to the upside, or whether we are going to break down below that box to begin a slide. So stuck in the box just means sideways action. We have to wait for the market to decide which way it wants to go after all this consolidation period. As far as the FTSE is concerned, it continues to show this line of support on the weekly RSI. It also continues bouncing above that RSI 50 level, just like it did here for these lows. We bounced on RSI 50 level the last couple of weeks. So as long as the market is above those two, the blue line, so above the blue line, and as long as the market is bouncing nicely on RSI 50 on the weekly, let's assume that this market continues to be stable, if not with a slight expectation of higher prices. We take a look at the Canadian market, which broke out this past week, joining other markets like the US market, and we can see here, as long as it's trading above the previous weekly closing high for 2016 at 14,939.04, you have to assume that this thing could actually see higher prices. So as long as the market is breaking out here, Canadian market holding above this level, you can give it the chance to move higher. Now, one of the problems I see here is potential for negative divergence. If you take this RSI and connect the recent RSI top line, you can see we are coming back to test this line. But as long as it is breaking out on the weekly, there's no need to try and figure out where the high could be. A breakout market could easily break out above resistance line. So again, above 14,939.04, you have to assume that this market continues to be stable, if not outright with a bullish expectation for higher prices. On the daily for the Canadian market, we can also watch the top side of the daily RSI. You can see it's coming into play. The market's been stalling around current levels here. So right there, market's been sideways as it digests this resistance level here. So if bulls want to move the market higher, they need to clear above this blue line to push the market higher. Otherwise, failure to clear this blue line on the daily RSI might suggest that ultimately the next meaningful direction is for lower prices. Take a look at the Brazilian market. As long as it is also bouncing back above the 50 level on its weekly RSI, one has to give it the benefit of the doubt. So it came here, it's been testing the 50 level, seems to be holding steady. That's all you need. It shows that it is stabilizing after this recent pullback off the highs here. Looks like it is now showing some recovery evidence. So again, above RSI 50, you have to assume that the market looks okay. On the daily for the Brazilian market, looks like day to day it is gonna struggle. It needs to move above this top side RSI resistance. As you can see, we hit that the last 2-3 days and we seem to be down a little bit. So this line is becoming a problem. That's one layer of resistance. There's also another layer of resistance coming back from the previous support line. As you can see, it was support here for the lows there. We tagged the line there for the support there. And then once we broke through the red line, all we have to do is extend the red line. So let's remove all that, and we can see that pretty much what I'm saying is backtest failure is taking place. So the market has come here, we've hit that red line, and we seem to be pulling back. Now you add on to the previous topside resistance line like that, and you can see that the Brazilian market right now, in my opinion, is stable to probably even looking to probe lower prices. So it is stabilizing, but as long as we have resistance on these daily resistance lines, chances are that eventually we could easily roll over and continue with the recent slide. So the risk here is, without moving above these resistance lines, the next swing trade is lower. If market is to see higher prices, then we have to see evidence by the market moving above the blue line and also above the red line, which would suggest that now we are probably gonna see potential for upside. But based on how we are closing for the week, we can see that the market more than likely here continues to be pointing to sideways, if not downwards market. Eric Muathe, muathe.com. I'll keep you guys posted. Otherwise, for subscribers, be on the lookout for part 2 of this weekend's market analysis video, and with some stock picks. Enjoy the rest of your weekend. Good luck, and see you in the next edition. Mwah. Peace and blessings.